Today we have Mihir Vora, the Chief Investment Officer of Trust Mutual Fund. So today we will discuss so much about the market and the emerging trends and about the sectors to be invested. And we have to learn so much from the CIO of Trust Mutual Fund. So welcome to my show. So what are the key domestic and macroeconomic trends that are going to impact the markets going further?
Sure. First of all, thank you for having me on the show. Always a pleasure.
Yes.
So right now, as usual, one can say that we are in interesting times, but market the way it is, we are always in interesting times, So the situation, as I would summarize it very, succinctly, is that the global economy is far more uncertain than the domestic economy.
Okay.
Right?
Yeah.
So the amount of uncertainty about where the US dollar is going, where US interest rates are going, where fiscal deficits in the Western world are going, oil prices, those are far more volatile than what's happening in the domestic economy. Okay. In domestic economy, not everything is hunky-dory, not everything is positive, but the point is that the volatility and the uncertainty is far less.
Okay.
So we have a situation where the rupee is amongst the most stable currencies, amongst the least volatile currencies, right? That's a function of what we have done in the last many years in terms of controlling our fiscal deficit, controlling inflation, making sure that the current account deficit is also reducing dramatically. So structurally over the last 10 to 20 years, we have done so much on the macroeconomic front that we are amongst the most, I would say, healthy economies in the world.
Okay.
Right? Our debt to GDP is low. So all the long-term big picture macroeconomic parameters and our demographics are in our favor. Right? In the shorter term, of course, there is always a cyclical plus or cyclical minus. And there are mixed signals. So for example, the PMIs are quite positive, which means that the purchasing managers of corporates are positive about the future.
Okay.
So services as well as manufacturing. But on the other side, we see that urban consumption is not picking up that much.
Okay.
Rural consumption is picking up.
Okay.
Credit growth is not picking up that much, and that's why probably the RBI raised interest rates. So I think domestically it's a mixed bag, but with lower interest rates, I'm very sure that the cyclical upturn we should be able to see in the next few quarters.
Okay.
The international situation continues to be more volatile, and that's one of the reasons why I think foreign flows will continue to come to India, because India is now a relatively safer economy.
Okay. So US or India?
Definitely India, all the time.
Okay. So do you think US is having more problems?
Definitely, because first of all, the biggest problem in the US is that they are riding a tiger.
Okay.
In terms of the monetary and fiscal policy.
Okay.
They did a lot of stimulus in 2008, 9, 10, 11 after the global financial crisis.
Yes.
And then they tried to undo it. But as soon as they tried to undo the stimulus, the market started tanking. So they started redoing the monetary stimulus. In COVID times, the kind of stimulus that they did in monetary and fiscal terms was not only more than what they did in GFC, the global financial crisis in 2008-9, but it was almost equal to what they did during World War II.
Okay.
So this kind of monetary and fiscal stimulus was never seen ever in the world in the US, right? But again, the problem is once you are on steroids, it's very difficult to take away those steroids. So in spite of the COVID problem being 3 to 4 years old now, it's past us, they are not able to reduce the fiscal deficit, or they are unwilling to reduce the fiscal deficit because of political considerations. And the kind of debt that they had to issue during COVID times is all coming for maturity now.
Okay.
In 2025, 26, 27, 28, there's a huge amount of debt that is coming for maturity. And because the whole world knows that so much debt is going to be reissued by the US, there is a problem. So in spite of the Federal Reserve cutting rates, the bond yields in the US are not coming down. And the currency is weakening. Right? So for the first time, we are seeing that the bond markets are doing opposite of what the Federal Reserve is doing. So that's a problem. It shows a lot of lack of confidence in the US dollar and the US economy. And that's also one of the reasons why you see gold, silver, all those other alternate assets, which are proxy to a weak dollar going up.
Okay. So by the time we are doing this video, there is a Middle East escalation and even the markets were getting corrected. So what is your view on this? So how much we can expect this correction?
See, Indian markets will correct, of course, like the rest of the world. But again, as I was saying, we have done so much on the current account deficit in the last 10 years that our dependence on and vulnerability on oil has reduced dramatically.
Okay.
Right? If you remember in 2013, when oil prices touched $120, there was a mini crisis and we had a weak currency, big trade deficit, etc. Now oil is no longer at 120. Of course, it has gone up from 60 to 70 plus, but it's still much lower than what it was. Second is, in that time, our current account deficit has shrunk dramatically because services and other exports have picked up. And the economic size is also double of what it was 10 years ago in dollar terms, right? More than double. So the point is that our oil as a percentage of GDP is, the imported oil as a percentage of GDP is much lesser than what it was 10 years ago. So our vulnerability to imported oil is also reduced. And plus we are also, open to buying Russian oil, etc., which we have seen the last 5 years. So to that extent, I think, yes, there will be a short-term correction, maybe a little bit, not too much, but I think we are better equipped to deal with it now than before.
Okay. Can we expect a 5% correction from here?
Probably. 1% I think has happened today. 2-3% more is always possible.
Okay.
But we have seen that, again, the global response has always been to do more stimulus. Okay. So whenever there is a crisis, they talk about more stimulus.
Yes,
Right.
I understood. So when it comes to the tariff, when the tariff talks started, I was expecting that India will get more advantage because there is a lot of restrictions over China. But slowly it started changing in favor of China. They almost finalized their deals, I guess. So what about the India now?
But China, at least, again, you can't believe what President Trump is saying because it's not yet on black and white,
Okay.
on paper. But the last tweet that President Trump did was 50% for China
Okay.
and 10% for US imports into China.
Okay.
50% is a big number. I don't think for India we are talking about those kind of numbers in any case, because we had already offered a lot of concessions in the beginning itself. So I think we started on the right foot, and we are here to kind of do a proper deal with the US. So I think India is in a good position as far as negotiations are concerned. But more importantly, the structural shift away from China is not going to change. Okay. So the thing about China plus one, yes, or Europe plus one, that is here to stay, and that is not going to depend on any kind of trade or tariff negotiations, because it is a security issue.
Okay.
If people suspect that any electronics out of China or any chips out of China, any PCB or any kind of component, whether it's a consumer durable or an automobile or a computer or anything, it can have security vulnerabilities. It could have, master chips or something like that. That suspicion is always there. Okay. And sometimes it has proved right also. So that suspicion against China is not going to go away. China has also demonstrated that in times of crisis, it can pull the rug.
Okay.
So they are doing it in rare earth, magnets, etc., rare minerals and chemicals. They did it during COVID times, where they reduced the supply of penicillin to the world.
Okay.
Right? So people know that in crisis times, they cannot depend on China. Yes. And these are structural issues.
Yes. So when it comes to comparison between India and China, so almost here and there, till 1978, our economy and China's economy is here and there same. After 1978, things have changed dramatically with China particularly. They have boosted their manufacturing, that has favored much. But in India, when it comes to India, 1991, I guess, liberalization has started. But still, I believe you are not up to the mark. So what are the necessary changes to be made by the government to pick up in terms of growth?
See, I don't think we can compare China and India directly.
Okay.
Because the whole, political system is different. There, it's top down and one decision from the top, and everything has to get implemented.
Okay.
India, of course, we have a democracy and we have our own way of doing things. So I don't think we can generate